Welcome back everybody to the Simple Markets channel. My name is JB and today we are going over the exact trading plan that you are going to receive for completely free from us. We have made some updates to it. We have added more information to help you guys out. It is one of the most proven trading strategies on all of YouTube with over 50,000 trades of data to support it. We have 55 funded members in our community trading this exact same strategy, proving that we have one of the highest, most successful trading communities on all of YouTube. And lastly, my data that I share with you guys almost weekly on this channel, showing you my results, my profit, and my returns, as well as all the trades that I take, following the exact same method. I hope you guys are ready for this video. There's going to be plenty of content drops, so feel free to download it before and follow along with me, and let's get right into it. Now, the first thing that we have here is the watch list and time. I mentioned on top here, this watch list is simply a recommendation. Feel free to add or drop as many pairs as you feel necessary or comfortable. I myself trade all of these pairs that are listed here. Most of our community also trades a heavy amount of trading pairs because in our opinion, and the data that we've collected as a whole, we find that the more pairs you have, the more consistent your equity curve will be because you're going to increase your repetitions overall. And also no time or price correlation. Orders can be set any time of day or any trading session. I recommend keeping the time of day consistent and routine like I do myself. Right before I hopped on to make this video, it was 9 a.m. my time. I like to wake up, go to the gym, eat a good breakfast, do my whole morning routine, and then about 9 a.m. I hop on, I set my orders for the day, and it takes about 10 minutes, and that's it, honestly. So just to briefly touch back over that, these are the pairs that I recommend trading. You can obviously add or drop as many as you would like. And when it comes to backtesting, my recommendation is to test all of these pairs in 1 year, as opposed to testing 4 years of data, but only picking and choosing some pairs. This is because the equity curve and the edge is formed by an accumulation of all of the pairs in their data. Yes, it's perfectly normal to backtest one specific pair out of here and have a negative year, but it's all of the data combined that creates that long-term edge. You could have a really bad year on Pound CAD, for example, but a fantastic year on Euro USD. And this kind of accumulation of all of these pairs combined is what creates that long-term consistent edge. Do not remove a pair from your watch list simply because it did bad in 1 year of backtesting. It's not enough repetitions to draw any conclusion like that. And we always recommend to our students backtesting at least 100 trades of backtested data. And if you do that and are a subscriber listening to my channel, it is proof to me that you're willing to put in the work. Shoot me a DM, send me those 100 trades, and I'll go over it for you completely for free. I'll give my feedback, my thoughts on it, and help you out. I love helping and giving info for free. I do it all the time in my DMs. But I think the better part of that is when someone proves to me they're willing to put in that effort and backtest 100 trades or so, give the strategy their time of day and their best shot, and I'm willing to help out in whatever way I can. Now, more importantly, you can see on the top here, it says the most data-backed strategy on YouTube. We are currently, as a community, at about 53,000 trades of backtested data with an overall win rate of about 34%, which is highly, highly profitable using a fixed 3 risk to reward. And keep in mind, a lot of people are brand new to the strategy that join the community, and we're helping them get to that profitable level with it. So even this win rate could be looked at as skewed downward and still at a ridiculously profitable level. In total, we have about 4,735 years worth of accumulated historical time replayed, which is just disgusting. And more importantly, we actually have 3 coaches in the community, myself, which is JB. We have another coach named Andre, who is a trading partner of mine for about 6 years now. And then we have another coach named Sven, who many of you can check out his YouTube channel. It's called Sven Trades. You may already know him. All 3 of us work together with our students, and Sven has his own FX replay account with some people from his investment firm, and they have over 50,000 trades as well, using the same exact strategy for his investment firm. So yes, we advertise the 50,000 trades taken, but realistically speaking, he has another 50,000 trades on another account. Of course, some may overlap here and there, but the general idea is we have data and we have so much of it to support the profitability of this system, and we give it away for free in this document, which I think a lot of mentors in the industry don't have enough tested data to feel confident enough in doing so. If your mentor that you have right now doesn't give you a strict written trading plan document like this, I would second guess their confidence in their own edge, as well as the data that they have to support their profitability in trading. We have over 55 funded members right now in the community trading this exact strategy in these exact pairs and checklist. And we also have the 3 coaches who have been profitable for years using this exact same 4-hour swing trading strategy. And more importantly, a whole community with 50,000 trades together working for the sole purpose of optimizing the strategy that we use. We have members who will go out and test specific rules, see which ones are better than others to continue optimizing and working on the method themselves, and then sharing it with the community, essentially learning and collecting data at 100 times the rate a single person could do. That is why the community is so successful and so important. But the next step we're going to dive into here is the entry checklist, and number one is a optional higher time frame bias. The most important thing I want you to understand here for those listening, the things that we have listed as optional or the differences we have in the trading plan, you will 100% be profitable, of course with a little bit of time and practice, using any of the variations. There is no variation that is better than the other. However, the differences in variation come down to a lot of things like your personal lifestyle, if you're a full-time worker and you're trying to do this on the side, or if you're someone who is all in on trading and really trying to increase those repetitions and profit very quickly, making yourself some money and getting those prop firm evaluations passed. Those are where the variances can come into play. Now, when it comes to a higher time frame bias, a lot of people in the smart money space use very discretionary concepts, which can become very difficult when using something like multi-time frame analysis, because not only is your trading plan going to be very discretionary on those lower time frames, but your bias is also formed from very discretionary topics. All of these smart money concepts being extrapolated over multiple time frames to mesh together into one plan is extremely discretionary, leading to a lot more inconsistency. So we found personally that if you don't even use a higher time frame bias, you simply hop on a 4-hour chart, look if it's going up or down, that is good enough. You will have a strong edge with that. And in many cases, we found that people who do use a higher time frame bias decrease the repetitions they're taking, because now the entry model has to align with that higher time frame, decreasing those repetitions, leading to longer periods of drawdown because they're not getting enough trades to let that edge play out at an adequate amount of time. So for me personally, I hop on a 4-hour chart. Is it going up or down? And mainly, most importantly, I'm looking for the rest of this entry checklist and I'm good to go. As we see here, keeping it simple and consistent is key. Now, number two is going to be the sweep on liquidity. Now, this is one of the most discretionary topics within this trading plan, and it can vary kind of depending on the factors I talked about before. More aggressive traders can take weaker sweeps, or in some cases, no sweep, for more trades, but overall you will have a lower win rate. Now, why is this important? Who would want a lower win rate? Well, the more trades part is very important here because you guys have seen in some of my past videos, win rate is not everything. If you are taking very high repetitions in more and more trades, despite your win rate being slightly lower, you will make more profit in the long run because your profit factor on your edge plays out quicker. And then the other end of the spectrum is a more conservative approach, higher quality sweeps, but you will have less trades, but a greater win rate. In my opinion, personally, this one here targets more the people that are working a full-time job. They may have other businesses like myself, but keep in mind there is a large spectrum between the two and both will be highly, highly profitable. The only end of the spectrum where I will say there is a lack of profitability or someone will be failing is when they are too discretionary. They begin looking for many minor details that are not listed in this checklist. They may start asking themselves about discount or premium, or they may be getting too in-depth with their higher time frame bias, or they may start measuring out liquidity sweeps or fair value gaps and making sure they're not too big or too small. These types of discretionary concepts, or looking at a trade and saying, that one looks a bit ugly, I won't take it. These are all discretion that can come and hurt the overall amount of trades you're going to get, and then of course hurting that long-term profitability. Third here on the list is going to be displacement. Now this is just a strong break of structure in your direction. We'd like to see a strong break of structure, not just one or two candles that wicked above a high and reverted back down, followed by an FVG or a fair value gap, which to us just is an indication of volume. Nothing too fancy there. If you can spot an FVG in the range, then you're good to go. And last but certainly not least, our entry model, which in my opinion is the most objective way of entering. I myself used to use supply and demand for many years. I understand order blocks. I understand entering on FVG. But the most consistent way to enter the market is just throwing a fib level, because when you have a trading range from a low to a high, it is very consistent to throw a Fibonacci on there and there is no sway or discretion within those rules. And as we always talk about here, keeping it simple, keeping it mechanical, and you will have that long-term edge a lot more comfortable on the mental and psychological side of things as well. If price comes down to my 74% right before my entry and runs to TP, I don't cry about it. I don't think I should change the plan and maybe start doing the 74% instead of 75. I'm perfectly comfortable with the consistency and the objectiveness of using a simple fib level to enter, and we will talk a little bit about risk management here. Now, targets and take profit, always the same. Your SL or your stop loss will be at the low of the range and the fib at the high. of course, vice versa in sells or buys. And always, because we are entering at the 75%, it's going to be a 3RR fixed ratio. We'll take a look at one of my open trades. For example, now I have AUD CAD. I looked at price just kind of moving upward, wanted to go for the buy position. We have the break of structure to the upside that's nice and strong. We have the sweep on liquidity here. We have a big fair value gap right in the middle of the range, which shows good volume. Price tapped me in. I take that fib from the low to the high. Because we enter at the 75% and always have our stop loss and take profit based on the range, you will always have a fixed 3 risk to reward ratio. And pretty soon, when this trade plays out, we could either break even here because we went above that 1R, or we could hit TP and reach 3R. So I'm completely risk-free on this trade, and you guys will see this trade in my journal in the upcoming weeks. Now, trade management, you can risk 1% per trade. That is, of course, very, very optional. It depends on your account size, or it depends on your preference, or if you're trading evaluations, maybe. You guys know I risk 2% of my account per trade because I am a regulated broker, trading my own personal capital, so I can kind of manage it how I want and how I'm comfortable. And we break even at 1RR. Both of these rules are kind of optional. You guys know I'm significantly up this year compared to if I did not use that break even rule. As we talked about with variations in the plan, whether it be repetitions or more aggressive approach, this could vary. That break-even rule could be better or worse for you. And here is a new section and a new piece to the document that those of you who have the older version will not have. We just have a big piece of data here to really show you the long-term scope of things. About 2,400 trades in this specific session, that 32% win rate, using the fixed 3RR, of course, and you could see the long-term consistency of this, ranging all the way from January of 2016 all the way up to December of 2020. Now, keep in mind here, this last year is actually not complete. That's why some of the months aren't showing, and it's also a lot lower of a return. But the year-to-date returns are insurmountable. We have 80%, another 80%, 130%, 116%, and of course, this year that is not finished, showing ridiculous gains, guys. This type of gain is nearly flipping your account each year, but the most important part is we're using 1% risk here. If you double your risk like me, you could see even greater returns, keeping these repetitions nice and high. And this beats out any other asset class or investment you can physically imagine. It's going to beat your crypto portfolio. It's going to beat your real estate investment. It's going to beat your stock market investments. Now, you guys know I love investing and I love my assets. That does not mean that you put all your money into your trading account and nothing into the ones I just mentioned, but I want you guys to get across why trading is so important and why it is looked at as one of the strongest assets in my personal net worth year over year. Scrolling down a bit more, we have some trade examples. Now, I'll be honest, these are in the old document as well. I have gone over them before. I'm going to brush past these today because, as you guys know, I have tons and tons of videos on the channel going over these exact trades and many more. And then last but not least, some of the takeaways here. Now, this part personally, I will not read and go over because this video will get stretched on a bit longer. I could go on for days about these different topics, but we have some of the bold font here to show the more important parts. We have some basic takeaways, which I think some of you as newer traders can really help yourself grow and improve that mindset. And most importantly, if you guys take this trading plan and download it for free today, backtest 100 trades and really collect data and give it that time of day, I will go over it completely for free. And you guys know, if you have any questions at all about the trading plan or anything that I went over today, shoot me a DM on Discord. Here we have jblaisdell729 is my username. I have this as my bio here with our link to our website. I'm always in the community, always trying to make fun little polls and stuff for our members as well on certain days, and I will answer whatever questions you guys have. I go through every single DM I get, regardless if you are in the community or not. With all that being said and done, you could see my real live gains here on my live account, on top of the backtested data to support the trading plan, on top of the 50,000, if not 100,000 trades supporting this exact trading plan and style, and on top of all of that, the many funded members within our community making consistent profitable income month over month, using prop firms and their own personal capital. So for those of you out there that have been watching my channel, maybe trying the strategy a bit and struggling with it, keep in mind there is so much supporting evidence and data on it, and maybe there's just some few adjustments that you need to make or work on, and that's where I come in to help. Shoot me a message, whatever you need. I'll help you out. I'll help you get on track, no problem. I hope you guys appreciate the videos and the content that I'm trying to drop for you guys. If you guys enjoyed the content, please drop a like on the video, subscribe to the channel. The more engagement and the more growth I'm seeing in my community and my channel, the more motivated I am to make more and better content for you guys. Thank you all for watching, and I will see you guys in next week's video.